everybody, welcome to Trading the Close. My name is Gareth Soloway here at verifiedinvesting.com. We're going to take a look at the market today, the crypto markets, the stock market, as well as the commodity markets. Interesting stuff, although albeit very light volume as it is a shortened holiday week. Remember, Wednesday the markets are closed. Tomorrow, which is Christmas Eve, will be closing at 1 p.m. on the stock market. Obviously, crypto 24/7 though, so there's always the potential of action there. All right, follow me over here. Let's take a look at the indices today and the big movers. We can see the Dow is up about 48 points. Not much of a move there. The NASDAQ is really seeing the gains today, right? So the NASDAQ's up about 163 points, which is a very, very solid day on that index. And again, that's being led by names like NVIDIA. You can see right here on the heat map, up 3.25%. Broadcom, another chip stock that is now a $1 trillion company, up 5% there. And even Meta having a nice day. So there are some pockets here of good movers. Even Google today / Alphabet up 1.5%. So it's very much a tech-led move, and you can see that again by the indices. You have the Dow just up 48 points, which is basically flat on that index, while the NASDAQ again is up 0.83%. S&P just up about 0.75%, up 43 points, as again we're floating back up after we saw that big sell-off late last week. Markets again are saying, okay, we're into the holiday volume. The holiday volume means most institutions have now gone away for the weekend, or the long week, I should say, probably this week and next week. And then the kicker is that that just leaves the retail investor, right? So if you asked 100 retail investors, how many of you guys short the markets? Maybe 3 of them would say that, maybe 5 of them. My point being is that if you take out institutional money, for the most part, retail is going to be buying the market, therefore it gives the natural float up. That's why the Santa Claus rally is so keen. We hear that term often, Santa Claus rally. Now going to the commodity index here, we can see oil is flat on the day, not much doing there. We still have a bullish pattern on the daily chart. We'll touch base on that. Gold is down slightly after a 2-day rally on Thursday of last week and Friday, down $14 today, and Bitcoin down to 93,000. And remember, guys, the level you're watching now is 91 to 92,000. I gave you guys the 108 high. I said, watch that. That's going to be the top. Now look for this support here on the downside. If we break the 91, 92 level, it opens a trap door quite a bit lower. So it's very key for the bulls to hold the line here. If you want to keep Bitcoin up and maybe making new all-time highs, you got to hold this 92 to 91,000 level. All right. Looking at the market on an intraday basis, this is the S&P 500. Each candle on this chart is 10 minutes long. And what we can see is, my point of bringing this up, by the way, is just to show you how quiet it is, right? So the market opened right here. This is where we opened. We floated down. There was a little bit of selling at the open, just minor selling, maybe some leftover institutional selling, and then we just have been floating gently up. We had a small profit-taking period in the mid-afternoon, and then into the end of the day, right back up we go. So again, gentle upside, light volume upside as we're in to the holidays here. Now, let's go into a couple key chart movers today, because there are some. All right, so we are seeing, for instance, Tesla today getting a small bounce on the chart. I drew in the trend lines of generally what happens when you have these upsloping channels. They can stay, price can stay in them for long periods of time, but the more you hammer on the low end of the channel, the more you have the potential to break down. Now, in general, into year end, you would assume a float up. Also, you have a hit here, which gives you that float to the upside. But I would dare say in January, look for Tesla to start to break to the downside. And part of this, by the way, and I want to explain this, folks. So let's talk a little bit about the mechanics of the market. Any stock that's up big on the year, you're going to see less selling into year end, partially because of window dressing, where institutions that are sending client statements out, they're not going to sell their winners and then send out those statements without those winners on it. They want their clients to see that they've been in Apple for the year, they've been in Tesla this year, they've been in these other big names that have performed well. However, once you get into January, they don't have to send statements to their clients until the end of quarter statements. So they can start selling. If they think Tesla's overbought or if they think Apple's overbought, they probably won't sell before year end. But once you get into January, they might have wanted to exit. They just didn't want to exit prior to year end. In addition, if you're an investor and you have a big gain in Tesla for the year, you're not selling at the end of the year because you don't want to pay taxes on that money. So you're waiting to January, right? So look for a lot of these high flyers, a Palantir, a Tesla, an Apple, some of these other big movers. In January, they should have a lot of selling pressure bringing those prices down early in the month, early to mid-month. And again, look for that. That's a very common occurrence. On the other side, you have the January effect. And I talked about the January effect here in a trade that I gave out here. And I'm giving every day in the game plan in the morning session, we're going over a January effect play. Now, what is a January effect play? Well, basically what it uses is the same tax strategy. And the tax strategy is this. When you have a stock like WBA, Walgreens, that has been pounded down all year long, and you've had a stock market that's been this strong, there are going to be a lot of investors that are saying, hey, you know, I made, let's say, $100,000 in profits this year in the stock market. Now, I don't want to pay taxes on those profits. So what I need to do is I need to find my losers and sell those losers into year end so it offsets my gains, reducing my tax burden. And so what you have is end of year selling from a lot of these beaten down names, which keeps price going down into year end or at least lower on the charts. But once you get past December 31st, there's no more selling for tax purposes. It's over. The year's over. So anyone who was going to sell would have sold into year end, and it essentially alleviates that sell pressure in January, creating a January effect. Well, what's the January effect? Well, when you remove a majority of the buyers, or I should say a majority of the selling pressure in a stock like WBA, you would anticipate a move to the upside. And that, again, is the January effect. So for me, what am I doing today? I'm starting to scour the charts. Over the weekend, I was scouring the different plays. I'm looking for beaten down, good quality names that have underperformed, that are seeing tax loss selling into year end, which is artificially pushing them down. And then once we get to January, there should be the alleviation of that sell pressure, and we should see moves to the upside in those names. It's a classic play I've used for well over a decade to generate some amazing profits in January. And obviously, I have us in smart money stocks and ETFs already in some of these plays going into year end, and I'll be looking for additional plays out there. So WBA is definitely fitting the category here. There's also they talked about maybe a buyer looking to take the company private, which is just a bonus. But again, look for this to bounce. We also have it at technical support right over here from 1996. All right, and again, I'll reveal another January effect play in tomorrow's game plan. All right, next up, let's look at Rumble. Rumble today, monster move after Tether invested $775 million. The stock popped up here. We actually traded this twice in the live day trading room for profits on the short side, so great trading there. Again, especially on a day like today when it's so light, you can get a trade like this, a movement, a momentum play like this. There's some great opportunities for us, and we were able to capitalize. Looking at Google today, I want to just point this out. Google/Alphabet. This is one of my favorite sells going into the new year. You have this upsloping trend line, and you have a topping tail right here, which is a bearish reversal signal. You're getting your retrace here, which again, in general, just like the Tesla chart, I would expect this to move up a little bit more into year end, maybe retest, and then get that next leg down. You have a gap fill right here, which would be a key target on the chart. Next up, let's take a look at Bitcoin. So Bitcoin seeing some sell pressure today. What we do know, and what I went over obviously earlier on, is that we have a chart where we have very obvious technical support here, right? So you have this area here, this area, this area, this area, and now we're kissing it again. So what this tells us, it gives us information on the chart. It says, watch this level. Every time price gets here, it bounces up. Okay, so we know that that's support. That's what support is, the definition of support. It's that causes price to bounce off of it. But what does it also tell you? It tells you that if price were to break below that level, now you have kind of that trapdoor opening and price can fall through dramatically, right? So again, this is a level that if you're a technical trader or even just a Bitcoin trader out there, crypto trader, you want to be following very, very closely. It's right around 91, 92,000, give or take, and you can see very clearly this would be the level that you need to monitor. On the upside, we know the 108 level. That was a level that I gave you guys early on here, and I said literally a month ago, watch for Bitcoin to go up to 108. When it hits it, that should be your major resistance. We've had about a 15% pullback. Now, I said this earlier today in the game plan, is that we can't claim victory yet that this is a longer-term high. And the reason why is because time will tell. So we have to be patient. We'll look back in a month, 2 months from now and say, yep, that was it. That was a long-term high. But I will say this, if you look at the bigger picture on the chart, and I'll go over and show you guys, it has all the earmarks of being a longer-term high pivot. And the reason I say that is because here very clearly, and let me go to the weekly so we can see it a little bit more clearly, but when you have all the like going back to 2017, these highs all matching up, you know, was this a major high? Yes. Was this a major high? Yes. Was this a major high? Yes. And so as just a logical investor, you have to at least be open to that possibility that this is another major high, because it has been in the past. We don't have any other data to go off of. Now, is there still a chance that it could maybe not be and maybe we race through? The answer is yes, but we don't know that yet. Make the chart prove itself first before you start saying this time is different. Everyone always says that. Like literally when we were going up to 108,000, you know, I said, hey guys, 107 to 108,000, this is going to be a major level to see. And then everyone's like, well, not everyone, but a lot of people, oh, this time's different. This time's different. That's what I've heard every single time. Every single time. And it might be. Maybe this is the different time, but we don't know that yet. And the key is, as a trader, I don't have the luxury to say, oh, this time is different, let me position myself. What I have to do is go with probabilities, because as soon as you take away probabilities and you don't use them, you're at the mercy of the market, at the mercy of emotion, and that is where, at least for me, I've taken my biggest losses when I lose my head in terms of logic. Logic dictates when you go with probability, you're putting odds in your favor. You essentially become the casino and not the gambler. All right. Last couple charts to go over here. We have gold. Gold is just down ticking a little bit here. We're right on this level. Notice we closed below here. We've now rallied back above, and now we're going to close today right on this line. Which way does it go? To be honest, I favor the upside ever so slightly, like literally 55 to 45%. It's almost 50-50. In other words, when I say that, what does that mean, guys? It means I don't have a good read on the chart. So you just have to be honest. You know, sometimes you're not going to have the best reads on charts, and that's okay. You can have a slight bias. A slight bias is fine, but it doesn't necessarily mean you trade off of it. And always remember that you want the high probability, 80% favoring one direction, in my humble opinion, before I start putting serious money on the line. Speaking of serious money, guys, I did want to mention this because I mentioned it in the game plan. What did I do today? I did pick up the puts on Apple. I didn't pick up like a full position here, but I did start to nibble on puts on Apple. I had warned you guys that I was looking at this. Again, we have Apple here, we have Apple here, and we have Apple here, right? So all along this line, but I'm also taking into account other factors. The NASDAQ with the parallel that goes back to COVID. I mean, so huge resistance there. Also the fact that the valuation on on Apple has gotten way out of whack here. For a stock or a company that's growing at like 3 to 4% per year, it's trading at a 25 forward multiple. That is very, very extended for a company like that. And so there's multiple factors here, but just a heads up, I did pick up the December 2026s, and yes, that is quite a bit in the future, 2 years out, but they were only charging about a 10% premium. I think I paid $24.25, 35 cents, somewhere in that vicinity for these put options on Apple to give myself 2 years, meaning that if it just drops 10%, I'm basically break even by that point. And in my humble opinion, it will get much, much more than that to the downside. I would be looking initially at a pullback here to about 235. That'll be a nice little first area where you probably get a bounce. And then if it gets through that, you have upsloping trend lines right here. In fact, look at these two trend lines merging. So this is going to be major support at 235. The key is major support can work for a bounce, right? But then if it ever breaks, watch out below. That's where, when you break major support, that's where the trap door opens and it can come down very, very quickly. All right, just back to the other charts that I was going on. I just wanted to mention that since, again, I did tell you guys I was looking to pick those options up on Apple. I still haven't picked up the S&P because it already dumped out. Now, if it retraces this week, I might nibble on some of those longer-term put plays as well. I know a lot of you guys play zero-day options. I don't do it, and I'll tell you why, because it's a pure gamble. For me at least, is again, time, like, and listen, this is just being frank and honest with you guys. I can see things coming a mile away. The question is it going to be tomorrow that it's going to happen, or is it going to be next week or next month or even next year? That's the hardest thing. The timing is everything. And when you do options, Options, again, if you want to gamble, you play the 0-day options. Some people can do really well at them, I guess, although I haven't met very many people that have. But ultimately, for me, I'm playing the bigger macro trend where I'm coordinating the bigger macro economy with the valuation of Apple with the chart. And again, charts can remain overbought and oversold for long periods of time, but eventually reality sets back in. And that's why I give myself so much time on these options trades. I'd much rather pay a little bit more in premium and not have myself lose all my money by the option expiring worthless versus giving myself too little just to save myself a couple bucks per options contract. Not worth it in my humble opinion. All right. Lastly, guys, again, silver didn't do much today. Just quickly flipping over to silver here. Silver, again, this is kind of what I'm expecting here, a little bit more upside into resistance. This was hitting, bounce, 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 breaks, retrace, and then further downside. And then if we look at oil, oil continues to be something that's very intriguing here because it's hugging this line, which again, this is a pattern that, again, you had a breakout with confirmation. Bullish consolidation, this would be that pattern expectation. Doesn't mean it will happen, but this would be the most probable outcome for oil to actually have a move up here in the near term. Now, longer term, I still think it's going lower, but near term, it very likely sees a little bit more upside. All right. Lastly, we'll just go to natural gas real quick here, which there isn't much here. You still haven't hit resistance. You're off of support. Slight down day today on natural gas. All right, guys. I'll be back tomorrow morning with the game plan, and then tomorrow, trading the close will be at a special time. Remember, markets close at 1 p.m. tomorrow. One of my head traders, Drew, he's going to be doing the trading the close tomorrow. You guys saw him last week. He's very, very good, and he's going to rock it tomorrow since I have a family obligation on Christmas Eve here in Florida. But either way, folks, I will be back tomorrow morning for the game plan. As always, I appreciate all your support, all your kind words, all your comments, and everything you guys do to make Verified Investing strive to be the best we can be. So thank you as always, guys, and I'll see you tomorrow. Take care.